Hello, I'm John Lloyd, President and CEO of Fidelis Private Fund. Sorry, I'm a little late, had some technical difficulties here, but I am live and we're here. So thank you for joining me for those who can. And I look forward to sharing with you what I have today. So right now, I'm not a professional podcaster and I'm not, talented in front of the camera, but I am passionate about helping people in business and helping people grow. I think if you're not growing, you're dying. And so I want to use these. I want to start doing these periodically, these live YouTube presentations, and just to share with people what I'm doing and to impart what I've learned to other people and to help people grow. So with that, I also, if you haven't received my blog, I do a biweekly blog that includes information on real estate financing, various investing tips, uh, management skills, just various things that can help you not only improve your business, but grow personally. So if you're not getting that, go to the description and there's a link in there that you can click on, get the contact information, and I'll put you on our list. And then also, if you haven't subscribed to my YouTube channel, subscribe. I'd appreciate that. So anyway, what I'd like to share with you today is 3 reasons to invest in real estate in today's downturn, this crisis that we're all going through. So I'd like to start. There's a quote that Warren Buffett said. He said, "Look at market fluctuations as your friend rather than your enemy. Profit from folly rather than participate in it." And I thought this really tied in to what we're going through, these market fluctuations and how can we participate on this. So anyway, that's these market fluctuations. You got these extremes. You have optimism where you have nothing can go wrong. It's all going to be this way. The greed factor, and then it swings over to fear and anxiety and uncertainty, and that's when there's opportunities for investment. On this side, opportunities to sell. This is more the investment side, and I see that as this opportunity is coming, that this is an opportunity to invest. You got to use wisdom, discipline, and be conservative. But as a lender, I'm looking at those same opportunities you are as investors to lend on. So, and as we face this fear and uncertainty, it creates inefficiencies in the market, and those inefficiencies are where you dial down, and that's where the opportunities are, where there's inefficiencies, and we can talk about that further here. So, during the 2008 recession, I made some of the best loans I made. I mean, you had not only prices that were down, you had good borrowers and good tenants at the bottom of the market, and the asset only gets better as the economy improves. So some of my clients made some great investments during that downturn. It may not be as extensive this time, but there's going to be opportunities. I want you guys to capitalize on them, and I want to be there to help you. So the 3 reasons why I think you should invest in real estate, excuse me, invest in real estate during this downturn is there's less competition because fewer lenders are out there in the market, and the lenders that have ratcheted down on their underwriting criteria. They made it tougher for borrowers to borrow, and what it does is it dials down the borrowers that have liquidity, are creative, have access to capital, have access to credit, and private lenders, and can work on getting their deal done, whereas a lot of the buyers can't. So I think it just reduces the number of buyers competing on the different properties. I just want to talk to the lenders about the lenders a little bit right now, because you have a lot of banks, institutional lenders that are just basically the fear factor is taken over. They've just decided, hey, I'm not going to lend, and the ones that do are giving you lip service because they're they're just kicking the can, and they don't know what to do, and so they don't want to turn a deal down, but they get it in the process. And my consulting to my clients is, hey, if your deal can wait, then wait for conventional financing, because these banks and institutional lenders, they have issues with appraisals, values. They're questioning historical values. It's so all of a sudden they're going to ratchet your deal down. And if you wait, I think until there's more clarity, they're going to be more lenient on the underwriting. But there's certain deals you got to capitalize on. It's these opportunities to invest. They're good deals, and there's private capital, there's private lenders that can move fast to get your deal done. So first of all, less competition because fewer buyers, and the lenders have ratcheted down on their underwriting. Second thing is asset strength and tenant quality are exposed during the downturn. I mean, it's like you see who's really got substance. You see who really has the ability to get through, and why. What better time and what better borrower to do to lend to from a lender standpoint is to on a deal where you have a good asset and a good tenant. So I think right now, the strength in the assets, there's certain, submarkets and product types that aren't so good. I would say office and retail are questionable. Um, Entry level single family, I have not seen much of a discount. A little bit here or there, but there's still demand. The exit strategy on entry level single family, the barrier to entry is way lower and allows you easier exit. And then also, um, as far as the tenant quality, you know, these businesses that can't stay open a month. I mean, it's like, how can you not have reserves to be open and they close their doors after a month? It shows you who can stay in business and who can. And when you're lending on an asset, that strong asset where the inventory is low, you have single family, lower level, you don't have oversupply. There's not a huge inventory. Industrial, same. I think those two classes are going to be the stronger class real estate classes going into this downturn. But going back to the tenant quality, you've got, you know, these tenants that are paying rent. If their business is thriving right now, then there is good chance they're going to be able to pay and come out of this even better. There's another quote by Warren Buffett, and he says, only when the tide goes out do you discover who's swimming naked. And it's like, oh yeah, you can see the tenants that are strong, and you can see the asset classes that are strong. So if you're going to buy something, buy in the strength of the stronger asset and a tenant's of pain, and there's a good chance you got a good deal going. So third thing is discounts in values. I think you're going to see sellers, motivated sellers, under the crunch, having to sell, discounting the properties. Again, it's different submarkets and product classes, but in general, you're going to see, I believe you're going to start seeing more of those um, in the coming months. So those three things, you got less competition from buyers, you got the strength of the asset and the quality of the tenant are going to be exposed, so you'll be able to see who's really got substance, and then you're going to see some discounts and some prices. So with that, there's as you in the 2008 recession, there was across the board a reduction in values. You had oversupply. You had, there was definitely different submarkets that were hit harder, but across the board, values dropped. Here, that's not the case. You've got certain areas. I mean, I've got clients that have called me and said, John, my sales couldn't be any better. I mean, it's like, there's certain industries that are open right now that are thriving, and you want to go after that product type and that type of tenant. But it's not across the board, I don't believe. And so I just want to distinguish that between the last recession and this one. It's different. And then another thing is a little bit of history is I did a little research. The 1918 and 19 Spanish flu pandemic. It killed almost 200,000 Americans, and that was a tough time. And we haven't even gotten close to that, and maybe we will. But I'm just saying that the the economy coming out of that, the early 20s, great economy. The Roaring '20s, they came back with a vengeance, and I think we can't be pessimistic. We got to be optimistic, and I believe the media has played into this. They've exaggerated a lot of issues and caused a lot of fear in the market. And I believe there's justification for some of it for sure, but I believe that the constant, uh, just the fear factor and the uncertainty and the anxiety day after day after day causes people. I think the sort of the elephant in the room, so to speak, is I believe the trauma that's going to come out of this. How are people going to relate to one another? How are they? It's like you know everybody's the enemy, so to speak, as far as this virus, and how are people going to react after the fact. Those are things that we don't quite know, but um, this has happened before, and the economy has come back. It's going to come back. I think for us is to look down, dial down. How can we take advantage of these opportunities? And yes, it's happened. This issue has happened, and it's not good. But let's look at what we can do to benefit from out of this. So the combination of getting a strong asset that's proven, a quality tenant at a good price, it's a good investment opportunity. It's only going to get better over time. So I forgot to mention too. Think of some questions at the end. There's a chat area down here for those who are online. And if you have any questions or anything, think of a few questions. I'll get to that in a minute. But if you haven't subscribed, aren't getting my blog, go to the link on the description. Click the link and fill in your information. I'll put you on our list. Subscribe to our YouTube channel. And also, if you have a real estate deal, if you have some financing you need, if you just have a question on how to interpret something, call me. Go to my website, fidelispf.com, and you can contact. Second here, sorry. um, and you can contact me, and I'll get back to you as soon as I can. Also, if you're accredited investor and you are looking to invest in a mortgage fund like Fidelis, it's a passive way to invest in real estate that's secured by real estate, generating a competitive return. Call me, and I'll show you how you can get involved and be a limited partner in Fidelis. Um, so So with questions, I've got a few questions here. If you if you have anything, maybe if you had something I just talked about, anything you want to ask, anything you want clarified, if you have a deal you're looking at and want more information on, go ahead and ask the question, and I'll respond. And no worries if you don't right now. Call me later. Um, so doesn't look like right now anybody's online ask anything, but thank you for listening, and I appreciate the time you take. I know everybody's busy, and I appreciate it. And so, thanks again, and I look forward to talking to you again.